With all eyes probably on Nvidia's Q2 results, this company just quietly posted some really good results. And I'm talking about none other than Salesforce Incorporated, ticker symbol CRM, after they reported their Q2 results. We'll get into the revenues, the earnings, the all-important free cash flows with this company, as it's becoming more of a free cash flow story than I'd say a revenue and earnings growth story. We'll get into the valuation. We'll take a look at some announcements and news that came out from this Q2 print, and then we'll jump into the technicals. This company saw a big decline in the previous Q1 report, and since then it's basically recovered all of that and now a little bit more. So we'll jump into that from a technical perspective, highlight some levels where it would make sense to maybe step in and buy shares of Salesforce.com. Hey guys, hope you're doing well out there. It's time to check in with shares of Salesforce. Once every quarter, we take a look at this company. Over the past 1 year, you have shares up 22%, but year to date, you actually are basically flat on the stock, considering the after hours gain of nearly 3%. Year to date, you really haven't done much in shares of Salesforce, and so we'll look at maybe that can be a buying opportunity, considering the fact that you have underperformed throughout the past year to date. Keep in mind, you also now do get a dividend with this one, a small yield of 0.61%. They did start that dividend earlier on in the year, so you can probably expect continued dividend growth with this one. As we get into the financials, we'll see why that looks more and more likely as we get along with Salesforce. Now, Q2 revenues, this was for their fiscal 2025. Revenues coming in at $9.33 billion. That was good for 8.5% growth year over year, topping expectations on Wall Street by a cool $100 million. On top of that, we got a beat on the bottom line, as well as you have non-GAAP EPS of $2.56. Estimates were closer to $2.36. In terms of the growth on their different business units, they saw 9% constant currency growth. That is on their overall revenue stream. In terms of the subscription and support revenues, that came up 9%, up to $8.76 billion. Consider the fact that that still is the vast majority of your revenues. They do have a smaller professional services business unit that accounts for right around $500 million. So really not that significant over at Salesforce. That still, though, is growing as well. In terms of the operating margins, GAAP operating margins came in at 19.1%, and non-GAAP operating margins came in at 33.7%. We'll take a look at the operating margins and how they're continuing to expand, both the gross margins, but also how well this company is controlling those operating expenses, as that was really one of the big issues with Salesforce back in 2021, 2022, just how fast they were growing those sales and marketing and R&D expenses. Now they've reined those expenses in, and that really is significantly contributing to margin expansion, again, proving to be beneficial for their bottom line. In terms of current remaining performance obligations, otherwise known as CRPO, that came in at $26.5 billion, up 10%, or 11% on a constant currency basis. These remaining performance obligations really is just a commitment that their customers have provided to them over the course of the next 12 months that Salesforce will eventually recognize as revenue, but they haven't really recognized that as revenue today. We always like to see these remaining performance obligations grow, because that's just showing that more and more customers are signing larger and larger contracts for the next 12 months over at Salesforce. Really, with any software as a service business, you'll see this with Adobe, you'll see this with Intuit, things like that. You'll see a current remaining performance obligation number that basically tells you how long and how much customers are willing to spend over the next 12 months. Gives you a good idea into the outlook for this business. Along with that, operating cash flow is coming in at right around $900 million. While that seems small, look, again, for a company that's well north of $250 billion, for just $900 million in quarterly operating cash flow, while that seems slow, and it is growing at relatively a slow pace of 10% year over year, what this company is a capital light cash flowing business. Because look, from that $900 million in operating cash flows, nearly 760 million get to stay as free cash flow. And so your free cash flow are growing at nearly 20%. Again, at that clip, you're more than doubling every 5 years your free cash flows. And free cash flows really is one of my favorite metrics to judge a company by. This company very consistent in how strongly they're growing those free cash flows. And then with that free cash flow, they get to do a ton in buybacks. They also get to now pay out that dividend, like we said. In terms of the guidance for the upcoming Q3, so they initiated Q3 guidance. Expectations were for $9.41 billion on that revenue side. Salesforce coming in underneath that, guiding for 9.31 up to 9.36 billion. So for the upcoming guide, they did come in a bit lower in terms of revenue expectations, as 9.41 billion was the expectation. That would have been 8% growth. Salesforce is guiding for right around 7% growth for the upcoming Q3. So a bit lighter on that Q3 guide, but what they did maintain was the full year fiscal 2025 revenue guidance to be between 37.7 all the way up to 38 billion. And consensus is right around 37.85. So smack dab right in the middle of what Salesforce is guiding. That would be 8 to 9% growth. And so look, despite coming in underneath 3Q guidance, they maintaining their full year fiscal 2025 guidance. That gives investors, in my opinion, a little bit of confidence that this company isn't really adjusting their full year revenue guidance. While they're still underneath Wall Street expectations for the upcoming quarter, for the full year, they remain on track. So maybe they're just seeing some of that Q3 revenue being deferred to the Q4. Possibly that could be some of the reason, considering the fact that they're not budging on their full year revenue guidance. Now, what would send the shares lower is if at the end of their Q3, they come in and tell us that Q4, they ultimately won't be able to hit this full year revenue target. Yeah, then that will certainly be disappointing because, yeah, Salesforce, at least at the current time, isn't saying that they're going to look to come in underneath of their full year revenue guidance. So they're maintaining that roughly 10% revenue growth expectations. In terms of full year non-GAAP operating margins, they're expecting 32.8%. Again, a pretty strong number, as for the most recent quarter, we saw 33.7%. So slight decline on your full year operating margins. And then for the full year operating cash flow growth, that is expected to come in between 23 up to 25%, slightly raising that over the previous quarter. So again, this company growing very steadily, as on the revenue side, you're expecting right around 7% growth for the upcoming quarter and then 8% growth for their Q4. I think a $10 billion number, certainly doable for this company. And then as we get into calendar year 2025, which is fiscal year 2026 for this company, again, they're expected to post somewhere between 8 to 9% revenue growth. I think that's really the run rate this company will be on for quite some time. In terms of bottom line EPS, they're expecting growth in that low teens range, somewhere around 11, call it up to 14%. That growth is expected to accelerate into the end of this year, and then once again stay relatively flat at around 12% growth on the bottom line EPS as we head into fiscal 2026. On top of that, in terms of their Q2 results, they also announced the departure of their CFO, Amy Weaver, who's been at this role since 2021. She's a pretty big name in terms of CFOs on, or rather I should say, in the big tech space, similar to how Amy Hood is really important over at Microsoft. I'm sure Salesforce will find a suitable replacement for her, and that's nothing to be worried about, but just something to know. In terms of their Q2 numbers, $9.3 billion in total revenues is what we have to show. Again, right around 8% or 8.5% growth compared to same time last year. What we really like to see is those cost of revenues being reined in, or at least being controlled to a pretty good extent, as your subscription costs didn't go up a whole lot. Your professional services cost really stayed flat year over year. And so your cost of revenues came in at $2.159 billion, helping our gross profit come up to $7.1 billion last year. You were at 6.5 for the last 6 months. Similar story, 14.1 billion in terms of gross profit last year. You were closer to 12.6. In terms of operating expenses, this is really where they're doing a good job controlling those costs. R&D is ticking up. This is something I certainly don't mind them spending in, as they're looking to build out those AI workflows and really embed AI in different parts of their tech stack. Where I really like to see a good cost control is on the sales and marketing side, as that didn't expand nearly as fast as your total revenues. G&A also not expanding as fast as your revenues, and then they're still experiencing a small restructuring charge, basically right-sizing their workforce. And so $5.3 billion of operating expenses, we subtract that off of our 7.2 in gross profit, and we get to operating income of nearly $1.8 billion. Last year, we were closer to $1.5 billion. Similar story on a 6-month basis, looks fantastic. $3.5 billion of operating income. Last year, we were right around $1.9 billion. So this company is doing quite a bit in terms of controlling those costs. That's really the lever they're pulling. As look, your revenue growth really isn't spectacular. It's right around 10%, 8, 9%. And so what they're really able to do is control the cost of not just those revenues, as your gross margins came up to 77%. Last year, you were at 75%. But what they're also doing is reining in those sales and marketing expenses, now making just 35% of your total revenues. Last year, you were at 36% of your total revenue. So while these small changes may seem small incrementally, they do add up, and those additional revenue dollars, while they are saved up, those can meaningfully contribute to your free cash flows, as that is still growing at a very rapid clip. Again, helping out your shareholders. I think your free cash flow is really what this company does best at this point. That's really the line item I would pay most attention to when it comes to Salesforce. Now, in terms of the balance sheet, all things looking as expected, $12.5 billion in cash and marketable securities. That is over the last 6 months, you were closer to $13 billion. So not much change on the cash side. In terms of property, plant, equipment, this is a very asset light business, which we like to see a software as a service company. And then in terms of the liability side, they wiped out that $1 billion in terms of current debt, have another 8.4 in terms of long-term debt. But again, $12.5 billion of cash to offset that. Nothing to be overly concerned about. In terms of the cash flows, this is, I'd say, probably my favorite part of taking a look at Salesforce financial statements is the cash flows. Because look, off of $1.5 billion in net income, you turn that into $900 million in terms of operating cash flows. This company still is doing a decent amount of stock-based comp, although that has come under control over the past, I'd say, 12 to 18 months. Now, the reason why you just see $900 million in terms of operating cash flows for the last 3 months, but then see $7.1 billion in operating cash flows over the last 6 months is because in their Q1, they get to recognize a ton in account receivables, probably lines up to a time where a lot of their customers pay out a lot of those obligations. And so that's probably a time when they recognize a ton of that revenue. And so I would pay close attention to the 6 months of operating cash flows rather than just 3 months of operating cash flows. Because look, if you were to annualize your 3-month operating cash flows, you don't even get to $4 billion. But this company has done more than $7 billion in operating cash flows over the last 6 months. And then what we really like to see is this is a capital light business. So just $300 million in terms of CapEx over the last 6 months. And so that leaves them with nearly $6.5 billion to do a buyback, leaves them with roughly $1 billion to repay some debt and repay some more financial obligations. And then they pay out that nearly $700 million in terms of that dividend, which again will likely continue to increase over the upcoming years. And so what I really like to see is the $7.1 billion of operating cash flows. You take off $300 million in capex and you get to roughly around $7 billion, $6.8 billion in terms of free cash flow. So even if we annualize that, give them credit for a little bit more, let's say $14 billion in terms of free cash flow for a company right around a $256 billion market cap, you're looking at close to a 5% free cash flow yield for this business, which again is a fantastic yield considering the fact that now eventually your risk-free return from US Treasuries will come underneath 5% pretty soon. So the fact that this company still is paying you out close to a 5% yield from a free cash flow perspective, again, that's not including stock-based compensation. If you do account for that, your free cash flow yield probably comes underneath 4%, closer to 3.5%, but still 3.5 to 4% free cash flow yield accounting for stock-based comp is a pretty good value for this stock. And as long as they're able to continue to grow those free cash flows at a clip, I'd say faster than 20% or at least close to 20%, I think that is a yield that is worth paying for, in my opinion. Now, from a technical perspective, last earnings call, we got a huge decline in the stock, down roughly, I'd say around 20% from what I remember. Since then, it has recovered quite nicely in a pattern of higher highs and higher lows, now trading up close to $268, $270 a share. Really, that's where it saw that decline. So you can really draw a smaller uptrend in the most recent 3 months, similar to how we had over the past couple of years. This one had been in a longer term uptrend, now basically flattening that out to a little bit. The key buying zone for this stock remains around, I'd say $230 down all the way to $200. This is really the buy zone we had left for this stock back in, I'd say, the previous quarter. And while it did come into that zone, it didn't stay in there for all too long, and since then has recovered quite nicely. The first level of resistance probably for this name is going to be up here closer to $270, $75 a share. Really where it is right now, you have some level of resistance considering that's where you've been rejected. That's also where you saw the huge decline in the previous earnings call. Higher than that, you probably have meaningful resistance at this $290 range. That is, again, where we've been rejected once in the past before. Really a ways away still from your all-time highs. I can't see this one getting there eventually. Certainly wouldn't be a straight line up. It would be a slow and steady move higher. I think this is a stock that you can pick up on really any substantial declines if you're really eager to get into it. The first level is probably closer to $250 a share, really on the nose, as that's been your support in the past. Really lines up to the bottom end of this channel, but really where I would be more excited to pick up shares of Salesforce in case you see any big sell-off in the markets, any big sell-off in this name due to whatever news it may be. I think $230, that could be a level where once again your price to earnings is coming down, your free cash flow yield is going up, and you've seen some support at that range in the past, that's a level where certainly I would be looking to add shares of Salesforce pretty aggressively, closer to $230 a share. In the meanwhile, you can probably nibble at these shares, maybe pick up fractional shares on this uptrend anytime it comes near the bottom range of this channel. That was my take on shares of Salesforce, a very predictable, steady business, kind of sleepy at this point considering the fact you're not getting explosive revenue or earnings growth, but what you are getting, still very good free cash flow growth. You're getting that dividend, you're getting a buyback as well at this point. So as this company continues to control those costs, I think you'll see the rewards in terms of their free cash flows. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening. I'll catch you guys in the next video.